What's the difference between death benefit and face value? They're two different terms, but technically the same money. Let me explain. Hi, welcome to my channel. My name is Coach Nelly. I'm the creator of Fit Method, which stands for Freedom Through Financial Literacy, Insurance, and Training. And in today's video, I want to make sure that you understand the difference between face value and death benefit because oftentimes those could be used interchangeably, which oftentimes confuses people altogether. So I want to make sure that you are clear with the distinctions between the two. Now, why is it important for you to understand that there is a difference between face value and death benefit? Well, it depends on who you're talking to. And if you end up using those two terms interchangeably, then it oftentimes confuses that other person. It's kind of like when someone says, "Oh, I'm going to go to the gym and do weights." Well, there's going to be a difference between dumbbells and barbells. Both of them are technically weights, but there's a time and place in order to utilize them. They serve different purposes. On the same token, face value and death benefit, though they refer to the same money, they have different purposes. Now, face value and death benefit technically refers to the lump sum of money that your beneficiaries will receive after you pass away. It's incorporated into the life insurance policy, and really, it's probably the main reason why people get life insurance to begin with. Now, as you are progressing and making those premium payments into your policy, that lump sum will range anywhere between, tens of thousands up to the millions. Now, face value, again, refers to the amount of money that your beneficiaries get after you pass away. However, face value is a term that is only applicable for permanent policies. Permanent policies usually come in the form of either whole life or index universal life. Now, in both policies, they both accumulate what we call cash value. When you're making your premium payments into that policy to keep it active, it is growing in what works like a high interest yield savings account. The value of that policy is going to be your cash value. Now, that part operates almost like a savings account and it continues to grow over time. In permanent policies, you also have the ability to access things like living benefits or even borrow against the policy. Living benefits are advantages of the policy that you can utilize while you're still alive. And that can do things like cover your medical expenses if you were to get diagnosed with something. Okay. Now, if you need access to cash because you have this, what operates like a savings account, you can access that and what we call borrow against the policy. So you can access that and use that in case of emergencies. Now, why am I saying all of these things? Is because the value of that is usually referred to the face value of the policy. Now, face value, think of it more as like when you're looking at a dollar bill. It could say 1, 5, 10, 20, 50, right? Now, that is going to be the face value. But behind the scenes, everything that you could do with that document is a little bit more complex and sometimes, depending on your situation, can be really advantageous. But the face value of that document is going to be the face value. It doesn't change. Now, the second term you want to know is the death benefit. Death benefit, again, is going to be the lump of sum your beneficiaries get after you pass away. But death benefit is only applicable for term policies. Term policies, though premium payments tend to be a little bit less than premium payments toward permanent policies, but term policies only cover you for a certain term, whether it be 10, 20, 30 years. So it is temporary, not permanent. And in that regard, they have fewer benefits that you can take advantage of. So that oftentimes they may have limited or no living benefits at all. They do not grow cash value. You do not have the ability to borrow funds against the policy. Term is your straightforward insurance that in the case that you pass away within that time frame, then your beneficiaries will get those funds. Now, one scenario that really makes that distinction is, let's say that you have a permanent policy. And you have that permanent policy, and let's say that you have a child who is now going to college and you need to borrow funds from somewhere in order to pay that tuition. Well, in a permanent policy, you can borrow funds against the policy to access those funds. You have a liquidity portion to it, and you can borrow against that cash value. Now, when you have those funds, you can pay off the tuition, but there's an outstanding loan against that policy because you borrowed against it, right? So let's say that you pass away and you still have that permanent policy, you have that face value. What the insurance company is going to give to the beneficiary is the face value minus the money that you borrowed, minus any applicable fees or any astounding interest. And so that leftover remainder, that's the money that your beneficiaries will receive. Now, in a term policy, let's run through the same exact scenario and you need access to funds. You cannot borrow against the policy, and that's it. You kind of stop right there. Let's say that you pass away. Well, the death benefit is going to be that amount that your beneficiaries get. So it's really, really straightforward. But let's say you have other circumstances in life that you want to plan for. You might want to offer a permanent policy. So in permanent policies, face value, additional benefits, but there's going to be some math involved that if you were to pass away, they're going to deduct some things from the face value. In a term policy, that death benefit is going to be your straightforward death benefit. There's no calculations that you need to do with any outstanding interest or loans. If you found this explanation helpful, go ahead and share this with anyone who you feel might need that clarification, the difference between death benefit and face value.